You're looking at a daily chart of the Nasdaq. Welcome to my weekly review. I'm going to review some stocks that I like, that I own, that I want to own. After I review this Nasdaq here. So in January, it like flipped the switch. You know, it made this bottom in October, kind of retested it here, and then it flipped the switch and had a 16% rally, and then gave half of that back. So it was a 50% retracement. So it was up 16% and pulled back 8. And then from March 13th to June 15th, a nice 3-month rally that was 23% in appreciation, and it was up 8 straight weeks in a row. And then it topped here on the 15th, and on the 16th, we had the quad witching day, which is, I warned about this volume here. You're starting to see, these big pink volume bars popping up in June. And so we got to be careful here. I know this is quad witching and this is rebalance. It doesn't matter. There's some selling out there and people taking profits. So just don't get complacent. Anyway, we had a 23% run here, and now we've had a little over 2% pullback, and it's trading just a tick below its 10 EMA here. So we're still in a power trend. Yeah, it's 0.1% below the 10, 1.5% above the 21. And if it corrects to the 50, which is this red line here, that's 6.5%, just know that growth stocks are going to correct 2, 3, even 5 times the index. So if that goes down 6.5%, your stocks are going to go down, 15, 20, 25%. So just know that and play it accordingly. Now, people are missed out on the rally because they're worried about Jerome Powell and interest rates and all that. That's what this was all about. From 16,212 to 1088, November 21 to October of 22, the market has been pricing this in, and they had raised 500 basis points. So now it doesn't really matter. Powell's been kind of neutered. They want to make him out to be the boogeyman, or Freddy Krueger or whatever on Wall Street. But even if he raises, a half or a quarter point anymore, the market's got that priced in. So I don't think that's a big concern now. And so people who missed out on this big rally want in, and they're just going to have to wait until this correction's over. I have no idea if this thing's going to go, sideways. It could just go sideways for a little while, up and down, or it could just pull right back to the 50. I mean, and it could, remote chance, go higher. We'll see about that. I think it needs to pull back a little bit more, though, but we'll have to have expectations. I'm not predicting anything. I just take it one day at a time and just follow price, and I do not trade the index. I like to trade stocks. I follow stocks. This is one stock that's just, it gave you a chance here after the earnings breakout, consolidated in a base, and now it just keeps ripping higher. This is Meta Platforms, the old Facebook. And Apple is making new highs as well. I'm going to go through a couple of these large cap tech stocks. Apple's making new highs. It's not making new market cap highs. It was over 3 trillion before, but it's making new price highs because they they buy back shares. So it takes a higher price with fewer shares to make a larger market cap. But anyway, it'll probably get to 3 trillion pretty soon. Anyway, Tesla is one that I like, that I own. I mean, it gave you a chance here. It was below the 200. Once it popped above right there at 207, that was a good buy point. And then it's been running real hard recently, and now pulled back to its 10 EMA last week. Had an inside day on Friday. Oh, I wanted to go back to the Nasdaq. I digress. I just want to show you on the weekly how this pullback looks, folks. I mean, this is a speck on the screen, a little inside week, and that's 1.4% pullback. So yeah, I think we got some more room to go. Anyway, I digress. I want to look at NVDA too, because this is one of those large cap tech stocks with Microsoft and Apple and Meta and Google and Amazon that are just moving the index and showing strength. This is the AI play. I mean, if you want AI, don't buy AI, buy NVIDIA. I mean, this is the one that's the hub of the artificial intelligence movement, and it's been showing a lot of strength. It pulled back to its 10 EMA and had a 3 weeks tight. If I go to the weekly chart, you can see the 3 weeks tight, which coincided with that pullback, and then it ramped higher after that 3 weeks tight action. Now, that doesn't always happen. It worked out for NVIDIA to had a 10% move after the pullback to the 10 EMA. That's this right here. And now it's doing it again. It pulled back on Friday. No guarantees it's going to find support and bounce here. It could come down to the 21, or it could come down to the 50, and that is 27% away. So I don't think people are interested in taking that trip. So be careful out there. All right, some stocks that, I'm looking at leading stocks and leading groups, and SMCI certainly has to be one. The computer hardware group is a top group. Now, you could see as the Nasdaq was floundering, I showed you last year from, November of 21 to October of 22, this thing was just bumping right along, just cruising, forming bases, riding higher, forming a base, riding higher. And then this thing popped after earnings and then popped again on the NVIDIA earnings call. And they've been signing, contracts with AMD and NVIDIA. I would imagine, they probably could raise guidance at any time. But that doesn't mean the stock's gonna, go higher. I think technically it's just trading. This could be your, bear with me here for a minute. This could be your pole. This could be your flag action, and maybe it'll come down here a little further to the 50. Who knows? Maybe it'll just find support here at the 21 and trade higher. But SMCI is definitely one that is at the forefront of AI as well, and definitely the stock to own or be interested in for sure. If you want to look at the big winners, it's got the markings and the makings of a big winner. I showed Tesla earlier. Top auto stock, the auto group is the second leading group, and this is the leading stock and the leading group, second leading group. And it just pulled back to its 10 EMA. So Tesla is definitely a strong one. I showed you NVIDIA, but I'm going to go to AMD because AMD is definitely it's a backup play to NVIDIA. It's not performing nearly as well, but you could see it had this cup-shaped pattern and then broke out, from 102 to 130 or whatever. And now it's pulled back to this buy area here, which coincides with its 50 simple moving average. So we'll see if this thing can trade down here and bounce. You can see it's been down like 6 sessions in a row. So AMD needs to find support and bounce. And I'm seeing a few of these. I'm going to go to the retail and beverage stocks here. And this is Celsius. This one had a nice base here, and then it broke out. And then just like NVIDIA, went up to 138, then pulled back to 122, which was its old buy area, right? So they return to their buy areas often and give you a second chance. That coincided with its 21 EMA, and now it's gone from 122 to 150. It's extended here, and that's what pullbacks are good for, is to get these extended leading stocks and give you a chance to get in on additional or secondary buy points. COCO is another one in the retail, beverage group. The beverage group has been really strong, and COCO has actually outperformed Celsius in the last year, and it pulled back to its 50 after earnings. And it just got right back into its trend in surfing the 10, pulled back last week, and then now is above the 10 again. COCO, very strong stock. Let me see. Oh, ELF, since I'm in retail, I got to do the ELF on the shelf here. And once again, in 2022, when the Nasdaq was floundering, this thing was just making new highs, just grinding higher. This thing is not really giving you a chance to get in because it's not basing. I want to say the last base was here, last summer, June, July of 22. So it formed this base, and then it's been ripping higher, and it's just been trading back to its moving averages every now and again, giving you a chance to get in, but it's not going to base. It had a couple of 3 weeks tight patterns. One was recently, and then now it's moving above that. There's your 3 weeks tight, and then kind of broke out last week, and then pulled back on Friday to its 10 EMA. So ELF is a really strong stock. Very tough to get in here. I mean, it's not basing and giving you a real good opportunity. Okay, I'm going to go to the software, the computer software database stocks, because that's one of the top groups. MDB, top stock in the top group, and this one's forming a shelf as well. Needs, I think, to hold it a little longer. Had an inside day there on Friday. But the longer this thing trades sideways, it's just telling you that investors are happy to pay, $390 for MDB. and let the moving averages catch up. It's doing nothing wrong. Another enterprise software name is HubSpot. Kind of like MDB, where it had this run up and now it's forming a shelf. It pulled back to its 21 here, but like I say, it's doing nothing wrong. I kind of like that one. Another one in this group that's just been it gapped up, I believe, on earnings, and it's formed a shelf, pulled back to its 21, and definitely something that I am looking at. DigitalOcean is just like, kind of like AMD here, where it formed this cup pattern and broke out. And then now has it sliced its 10, it sliced its 21, maybe find support at the 50. Definitely one that I'm looking at because this one has fundamentals. I talk a lot about charts and patterns and technicals, but really what moves the stocks are these earnings, the quarterly and yearly earnings, who's taking market share. That's why ELF's going up. That's why Celsius is going up. They're taking market share and they're growing really fast. And DigitalOcean is, it's got good earnings, good fundamentals, good sales growth, 30%. And so that's what's going to drive the stock higher. A couple of other ones in the software names. This is security software. I don't want to lump them all together, but Palo Alto Networks, got to look at the weekly. These are weekly reviews. So look at the weekly, you dummy. Anyway, this is a long consolidation period here. It says 57 weeks and now just broke out recently. Looks like, an inside week last week. Palo Alto looks strong, and so does Fortinet. There's another one that I like. It's just trading near its old high from back in December of 21. So back when the Nasdaq started to correct, it's right back to that 74.35 level. So that's definitely an area of interest here if it can get above that. And it's only 4% off of its high. So Fortinet looks good to me. And I'm going to get out of this group. I'm going to go to the home builders because the home builders have been strong. My favorite home builder is DR Horton. The reason why is it's the biggest one. It's the largest market cap. It's the most liquid. It's got 41 billion market cap. You can see it just consolidated here for a long time, formed a 3 weeks tight. Then this cup with handle is actually kind of like a handle off this larger base here, which started way back in December of 21, back when the indexes corrected. It's amazing how when the indexes do well, we do well. When the index is going down, our investments don't do so well. So don't consider yourself a genius because you're making money in a bull market. The index and then the tailwind of the index helps tremendously. Pulte Homes is another one. I don't own it. I do like it. I mean, it's a little stronger than DR Horton, as you can see. Had this, I got to go to the weekly. Sorry about that. You can see the base on base. These are big bases. And this actual cup with handle, kind of like DR Horton, it's just an actual handle before taking off. So these things have been incubating for years, a couple of years. So I think they have more room to run. I don't see why not. The home builders are strong. Meritage was one that actually gave you a chance to get in here. It was on our watch and ready list here at 130, and now it's at 137, starting to push away from its base. It gave you a chance, though. I mean, it pulled back right here, this consolidation. It gave you this pullback to the 10, and now it's moving out of there. Right here on June 16th. Was that Friday? Yeah, and then last week just pushed higher out of its base, so it was up 5%. So that's a good week for Meritage. The last one I wanted to show is GRBK. This is a leader in the group. It's up 125% in 2023. Once again, it's a weekly review, so I'm going to look at the weekly report, and you can see this consolidation period here. Cup with handle. These have been incubating for a long time. So, like the saying goes, the bigger the base, the higher in space. Yeah, December of 21. So, I wouldn't be surprised to see them move higher. We saw that with the oil and gas stocks last year. They had been, incubating for a long time. They had a nice long run, couple-year run, but those have fallen on hard times as well. That's what happens with stocks, rotation in and out, and it's all a cycle. This is ImmunoGen. This is what I wanted to show because of the high tide flag pattern. It came out of a base. This has been basing for a long time. You could see this 663 here, and it broke out this long consolidation and formed this flag pattern, just kind of went sideways. This is what I'm expecting here, maybe with SMCI, hopefully. And then now it's just moving higher. This is definitely a takeover target. I know any biotech stock is a takeover target, right? Which is not actually true. A lot of them go out of business, but this one is definitely caught some eyes. This is 144% move, then had a short stroke pattern with that high tight flag, and now it's just pushing higher, now over $20. So that's one of the biotechs I like. I like biotechs. You know, they don't have the fundamentals like I talked about earlier, but you know, there's a lot of hope and promise with these to make people's lives better. This is Exact Sciences, once again breaking out of a base and just ripping higher, pull back to the 21 one day. And if that was on news of an approval, or I forget right now, but it was definitely in the news this week, had good news, and then sold off on the news, which happens often. You know, people don't understand that, you know, buy the rumor, sell the news, but then it had an inside day the next day, and now a double inside with a quiet day on Friday. Anyway, that's it for me this week. You know, embrace the pullbacks. You know, the stocks go up and down, they're not going to go up forever. So I believe the Nasdaq has more room on the downside. I, you know, posted that, you know, maybe SQQQ or something along those lines, some short to ETF vehicles might be helpful, you know, in the pullback, and people are throwing daggers, but it's okay. Stocks go up and down. They're not always going to go up. Anyway, we never give up.